my friend Ed says, if somebody tells you you've got contagious death cancer, you're not just going to say, okay, doc, what do we need to do about it? You're going to say,
Right.
okay, what's your prognosis? And then you're going to immediately go and want to get a second opinion. How much more important is it to the future of your business to get that second opinion when it comes to taxes? Doesn't mean you
Yeah.
need to switch.
What you don't know is costing you commas and zeros. Welcome to the Owner's Profit Playbook. I'm Pat Mancuso. Most entrepreneurs think their biggest challenge is growing revenue, but the real problem is the profit leaks hiding inside their business. On this show, we break down the strategies, structures, and financial blind spots that separate struggling operators from truly profitable businesses. Because building a business is one thing, but building a business that creates wealth, that's the real playbook.
Welcome to the Owner's Profit Playbook. My name is Pat Mancuso, and I am excited to be with you today. We have a very special guest. Full transparency, I have a business relationship with Matt. I've known him for about 5 years, and we co-authored a book together. And yet, this call today is about him and about the knowledge and experience he's going to share. 93%, that's the number of business owners who, according to people who study this for a living, are overpaying for their taxes, not because they're doing anything wrong, because they're doing everything reactive. They hand their numbers to their CPA once a year, file, and hope for the best. But there's a different approach, a proactive tax planning built into the tax code by Congress, sitting right there for any owner willing to plan ahead instead of looking back. Today's guest has spent 2 decades helping owners find that money. And what you don't know about your tax strategy is costing you commas and zeros, as we say in our business, every year. Before we jump in and talk with our very special guest, Matt Pearson, we have a special message from our sponsor. If you're a business owner providing health benefits to your team, there's a good chance that you are overpaying in monthly and annual payments by 30 to 40% in a single month or a single year. Mancuso Consulting Group helps business owners uncover hidden savings in their health benefits without changing doctors, without changing deductibles, without changing providers. A simple few data points provided to us will provide you an estimate within minutes. Find out what you're overpaying by visiting www.reduceemployerpremiums.com. That's www.reduceemployerpremiums.com. Now, on to today's guest, Matt Pearson, an award-winning business coach, serial entrepreneur, and founder and CEO of Excel Empire. For almost 20 years, he's worked directly with business owners to help them grow their companies and keep more of what they earn, including building and selling a marketing and coaching firm with revenues exceeding $100 million annually. He's the author of Avoid the 10 Tax Mistakes Sabotaging Your Small Business, and today he equips business owners and real estate investors with proactive, ethical strategies for business growth and tax reduction. Matt Pearson, welcome to the Owner's Profit Playbook.
Well, thanks, Pat. Great to be here. Appreciate the opportunity.
Well, I am excited, Matt, because the Owner's Profit Playbook is about helping business owners close those blind spots, uncover dollars that we add to their top line or bottom line. And our conversation today is, and probably by the time this gets posted, will still be helpful to business owners, correct me if I'm wrong, that filed extensions for 2025.
Absolutely.
Yeah. So let's talk, Matt, a little bit about your journey. I want to spend more time on technical and in the things we can help business folks with. But Matt, you spent years as an executive director in the Christian camp and recreation industry before building coaching and tax strategy company. What pulled you out of that world into this one?
Well, it's interesting. I was a terrible fundraiser. I really hated to ask people for money. And so one of the things that I did is I found a lot of the people that were donating to the camp were business owners. And so I wanted to give something to them. I'm a give first type individual. So I started meeting with business owners in and around the greater regional area that I was in. And as I would meet with them, they would say, "Hey, listen, you're really helping me grow my business. I'd like to pay you for this." And I said, "I can't. I'm an executive director of a Christian nonprofit, but you can send 10, 15 kids to camp." And that's really what happened. And an kind of unplanned thing was gifts in kind. The guy owned a continuous gutter company, and he would bring all of his employees down for a Friday night and Saturday. They would put continuous gutters on 35 buildings in, basically 16 hours. And so that's really what God used in my life to kind of show me that there was a different path for me. I still am very involved in Christian camps. We actually have a foundation that helps fund Christian camps and Christian camping counselors and employees. So I still love that portion, still see that's where God got a hold of my life. But it's also where God showed me that, hey, I've created you to do things that maybe are not applicable here, in this remote location where you have to go 2 hours. At that time, I had to drive 2 hours to a Walmart, if you can believe it.
Oh my.
So yeah, so that was sort of that journey. And so as I started leaving the Christian camping industry, what I did is I got caught up with the Wharton School of Business, and they had a Appalachian program, and I picked up supposedly originally I was supposed to pick up 10. Ended up finding out I was pretty good at it, and so they actually give me 35 different clients. And I went through their program. At the end of that, I was awarded the Entrepreneurial Coach of the Year. But it was interesting. I was very short-lived as a business coach, even though I still use it in all of my interactions with businesses today. I recognized two things. Number one, my very first client was a tax attorney, and introducing that tax attorney to those businesses helped them more than anything else, was helping them find money that they didn't have to be paying and doing it legally, ethically, and morally. So me and that tax attorney started our journey on doing tax planning, and that relationship is still today. Ed Lyon is, still very involved with Excel Empire as our chief tax planner. And so that goes all the way back to 2003, 2004. And that's when I decided, you know what, this business coaching thing isn't for me. I want to really help business owners kind of pull that lever of keeping more. And so that's when we started tax planning together, Ed and I. And then in 2016, we started a company, like you said, that I was very fortunate, and it grew very quickly in 2022. Sold that,
Mhm.
and one of the reasons was it got really caught up in the pandemic
Yeah.
world. We did really well during the pandemic era, but a lot of those tax credits I knew were going to be going by the wayside, and I just decided I wanted to get it back into tax planning. They wanted to ride the pandemic out, and so my partners bought my portion of the company, and I started Excel Empire in 2023, and to God be the glory, it's been very effective at helping entrepreneurs reduce their taxes and grow their business. And so we're real excited to be a part of that. So our name Excel comes from 2 Corinthians 8, verse 7. Excel in the grace of giving. I don't want to be one of those business owners that says, hey, buy this, it works. We really want to bring real value to the marketplace, different value to the marketplace. And then awesome, the empire is, most business owners are really trying to build their empire, and their empire is bigger than their business. It's their family, it's their legacy, it's being involved in their community, their church, etc. So we really want to help people excel their empire in the right ways, doing it ethically and legally and morally. And most of the time it's around tax savings. We
Yeah.
typically can save somebody between 35 and 50% of their current taxes, sometimes even more if they're exiting their business, because we help people exit their business somewhere to the tune of about 40 to 60 million a month. And so, if you're selling a business and you're selling a $4 million business, and you owe $1 million in taxes, 23.8% roughly, hey, if I can help save $500,000-600,000, that's going to move the needle for most people.
Yeah, absolutely. Well, and Matt, our relationship has come full circle. And, one of the exciting things for me was about what you what you transitioned to, if you may, in terms of the tax planning and tax strategy. And so all the things that we have the opportunity to help business owners with, and you brought up one of them, which we'll talk about. And I'm also fortunate that we've had Ed Lyons on the show before,
Oh
and
yeah.
did a
Ed's no
great
stranger
job.
to a podcast for sure.
Yep, yep. And we actually did a webinar, and we've co-authored that book, the three of us that we wrote. And so, let me ask you. You wrote a book called "Avoid the 10 Tax Mistakes Sabotaging Small Business." What's the most common mistake you see, whether you put it in the book, or the most common mistake you see with businesses?
Um, that's a great question. I would have to say the most common mistake is that the business owner thinks that just by doing their books and just by getting their information to their accountant, that everything is going to be good. And here's what we find. And this isn't our finding. This actually was found by um, the government accounting office. 21%, 21% of the errors made in overpaying in taxes are because people categorize things wrong, put things wrong in their books, or just don't understand how to take money out of their company. I'll give you an example. I was talking to a young couple the other day, doing very, very well, and they went to a seminar at a hotel, and there was a guy there. He was selling a software that can reduce your taxes and everything, and he talked about, you know, you should you should reduce your payroll by firing one of you. Both of you shouldn't be in the business. So they went home and they got on Chat GPT, and they decided by reducing their salary, they were going to save all this money. And they reduced their salary, but they didn't reduce their take home pay. So when they're coming to me, they said, we don't understand. We did everything that chat told us. Did everything that the guy's software told us. And we're paying as much in taxes as we paid last year. And it's because absolutely your entity isn't structured properly to do what he did. Chat GPT from a tax standpoint is wrong about 50% of the time. I don't know if that's going to continue to be the case. But if you go in today, Pat, you know the big beautiful bill was passed in June of last year. Chat GPT still says if it passed, we might get bonus depreciation. It passed in June of last year. All the
Yeah.
big four started doing tax planning based on that. We started doing tax planning based on that. But again, ChatGPT does not apply the big beautiful bill. One of the biggest changes in the tax planning world that we've known in my entire career, and Chat is just behind.
Yeah. Yeah. Well, and I don't recall the specific case, but there was a court case where somebody submitted their taxes based upon information from Chat GPT, and actually cited case law and cited IRS regulations and code, and none of that stuff existed. And unfortunately, they got bit by that. So yeah, this is probably one of those things that in terms of tax planning, tax mitigation, tax credits, that you don't want to use Chat GPT or Claude or any of that. In fact, I just read this morning, believe it or not, is it circa 203 or 230?
230.
230. Talk about it. I just read it this morning on this.
Yep. Yeah, and again, one of the biggest mistakes again is just that people are they're trying to just assume that everything that they hear is applicable to them, or that their CPA is going to automatically just magically know that, hey, I bought that new F-250. They're going to definitely do 100% bonus depreciation on it. The CPA is not going to do that. The CPA is going to you're going to keep this truck for, I'm looking here, typically 5 to 7 years. We're going to write it off in a 5-year period, simply because that is the way a CPA thinks. They're typically a super conservative mindset, so they're going to take a conservative approach to your taxes. I had an individual just the other day. Is the reason I'm speaking about an F-250. They were selling their company, and to avoid taxes, they decided, I'm going to go out and buy a new pickup truck for myself. And they bought it with the company. They depreciated it in the first year. They sold their company in April of this year, and they're just now realizing what depreciation recapture is. Nobody told them about that. They
Yeah.
just had a buddy that told them, it was actually their business broker, hey, you're going to pay a lot in taxes. Go buy some things that you
Yeah.
need. And
Yeah.
it's just, again, the biggest mistake is people getting the advice from people that really don't know the whole story.
Right.
It's got to be more of a holistic approach. And I think that's what, like you do in the healthcare business, that's like we do on the tax side of things. We look at the whole picture. I want
Right.
to know what the consequences are. I had a client that was looking between us and another group of tax planners. And at the end of the day, he says, "Matt, I really like you. We have the same values. We have some of the same, goals in life." But he goes, "They're going to save me about $250,000 more than you do." And I'll just call the guy's name Bob. I said, "Bob, you told me you got $1 million in the bank, and next year you need to build a $6 million manufacturing facility for you to stay competitive. If I zero out your taxes, do you think that the bank is going to lend you that money?" He goes, "Well, that's a good question." I said, "Well, go ask your commercial lender." Came back, decided to go with us
Yeah.
because his commercial lender said, "Yeah, we're not going to be able to loan you anything if you're not paying taxes." And the commercial lender couldn't give him the reason why. Just our
Because
software
he did not
is
know.
going to deny you,
Yeah. Yeah.
that loan. And that was key for his business. So again, somebody could have reduced your taxes to zero, but they were going to reduce your business's growth opportunity as well.
So there's a couple things that I want to come back to this exit conversation.
Yeah.
But and we're not here to beat up CPAs or accountants or advisors or anything like that. But you touched on something which is something, you lead with and I believe in, and that is it's about asking the questions that nobody really asks, to the extent that they either don't have the knowledge, they're moving too fast. You and Ed share stories about, the ABC company that, we were able to find $11 million worth of tax savings on. And this was a, $40 million company. And you would think the $40 million company has the right advisors around them. So tell me what happens there?
Well, it's the frog in the pot, basically. It's getting heated up. Business owners, some of them are just successful. They're successful at everything they do. Some of the business owners that we work with, you know, um, they get to the place they start out and they're running a $5 million company, and that's really good. The next thing you know, they own the HVAC, the plumbing companies, the house protection companies, the gutter companies, the lawn care company, and now they own a conglomerate that's worth $40 million a year. And it's just they just kind of grew with it. But a lot of times they're still doing the same things that was when they was a $1 million company. So literally, like you said in your opening, they're just they're just hemorrhaging all of these great opportunities because they're still running a $30 million company like it was $1 million company. And maybe they changed CPAs, but the first CPA probably was honest and told them, "Hey, you've outgrown me." Their second CPA, you're their largest client. They don't want to lose you. So
Right.
they're, definitely working on the relationship inside of things. But, it comes down to that one important question that Ed and I promote all the time. It's great. You got a great CPA, you got a great accountant, but ask yourself, when was the last time they called you and said, "Hey, I've got an idea that's going to save you money"? And it wasn't the opposite direction. "Hey, I'm in third quarter. I'm up 30%, revenue over last year. What can I do?" Well, that's a great question. Have you thought about, do you need to buy anything? If you're getting that, then you recognize you've probably outgrown that second CPA, and you probably have not taken advantage of just some incredible easy strategies that don't cost you a lot.
Right.
But just, even in the entity formation, how to structure the entity so that you can take advantage of all the different tax strategies that are available to you.
Well, and you're talking about reactive versus proactive, right?
Yeah.
And even when and again, I've experienced it, I know you guys have as well in this process. Even when you bring this to people, business owners,
Hmm.
They struggle with making this transition from away from their folks around them to a new way of thinking. Why do you think that is, and how do you help people overcome that? Because there'll be people listening to this going, Matt, this sounds great. Matt, I'd love to save money legal, ethically, and morally on taxes, but I've had this CPA for blah blah, and they tell me how to address that.
Yeah, no, that is often the case. Again, we'll change marketing people. We'll even change employees. The one rule that I've had for a long time, it came from a guy when I was one of my very first business partners. If you can't change people, change people. It's better for you. It's better for them. But when it comes to that accounting, because I really don't, I'm a business owner. I'm successful. I got an $8 million business. I'm netting 1.5 million, and my family has got a nice place. My kids are in private school or going to university, and everything is good. The one thing that I don't really know about my business is my numbers and taxes. It's foreign to me. So
Right.
for me to know whether or not my guy is helping me out or not, or to know whether I need a fractional CFO, I just don't know enough about it. So when you're telling me that you can offer me these things, that all sounds great, but I don't even know if my current CPA is doing a good job. How can I really vet you?
Right.
And so I think that's one of the things that, they're successful business owners. And I always tell people, it doesn't matter if I'm working with $1 million business owner or a guy's running a $30 million business. A lot of times when it comes to taxes, they know about the same thing. And it's because they're really, really good at excavating, really we're good working with municipalities or providing services to somebody. But when it comes to the tax side of things, they just don't understand it. And quite frankly, it is complicated. And the worst thing is if you get it wrong, there's real penalties.
Sure.
So, I think that's the reason why it's so hard because I know this guy. I know he's super conservative. I know he's trustworthy. We do different things together. We go fishing together. He's a good guy. Who are you? And I think that's a hard thing to overcome. But again, I think it behooves you. It's prudent to get a second opinion. Like my friend Ed says, if somebody tells you you've got contagious death cancer, you're not just going to say, "Okay, doc, what do we need to do about it?" You're going to
Right.
say, "Okay, what's your prognosis?" And then you're going to immediately go and want to get a second opinion. How much more important is it to the future of your business to get that second opinion when it comes to taxes? Doesn't mean you
Yeah.
need to switch.
Yeah. Well, and you touched on exit earlier, and now I do want to mention, timing. So earlier we did a recording with Joey Albertson, who wrote a book titled The Profitability Project, and her mission is teaching entrepreneurs how to truly understand their financials. And I know we have a few services at Excel that does some very similar things to that in terms of that process. So but you touched on the 20 to $50,000 a year, and if a business owner thought about it and went, well, if I've been overpaying for, let's just use 50 for the last 10 years, that's $500,000 more in my business, but it's not just 500,000, right? I mean, it's what you could have done with the 500,000, and then it's the multiples that potentially that produces on exit, and it's getting business owners to think like that, and that just doesn't happen in the traditional world.
Not at all. Not at all. And I think you really hit the nail on the head. They just don't understand as a business owner, their understanding of their books, their P&Ls, their balance sheet is basically if there's money in the bank, we're doing good.
Right.
And if that's your idea of doing good, you're probably going to be taken advantage of when you go to sell your business. You're probably missing out on a lot of opportunities to keep more of that money. And it's just an education piece. Business owners are smart. You're not successful in business if you're not
Right.
smart. But for some reason, and I don't know why, business owners just feel comfortable at not looking at this one area of their business, you know. Yeah.
Yeah. Well,
They're comfortable with not knowing it. I don't know
yeah.
why.
Yeah. Well, this, we talked about this in the earlier conversation with Joey, is that in some cases has to do with the relationship with money, from, how they were brought up, what they had, what they didn't have, the mentors, the coaches, and such. Tom Wheelwright wrote this book, Tax-Free Wealth,
Yep.
and he talks about this, and I want your perspective on it, but how the actual tax code incentivizes business owners to take advantage of what they're offering, and yet many don't.
Well, I know, and like Tom, he's a great writer. He puts things on the bottom shelf. One of the things that I think from a business owner's um, perspective is, and I'm sorry, I think my train of thought just derailed what you were talking
Well,
about.
it's just that the incentives that the
Oh,
government
that's what I was
gives
going to say.
us. Yep.
One of the things that I think business owners really would be good to just stop and think about, there's a bunch of people that we elect and we send to Congress and we send them to the Senate. Most of those people, before they ever got there, was a business owner. And so they think like a business owner. They're smart. I always tell people, people think that people in Washington are just so dumb. Think about it. Um, when they
Well,
came up,
some of them, Matt, some of them do need some help, right? I mean, come on, let's be serious. Some of them,
I probably know some of those people, so I got to
yeah,
be real
yeah,
careful. But what happens is like, remember back in the 80s when they came up with the 401k?
yeah,
You think about that, and all of a sudden the stock market became available to the average person. And if you look at that and you look at the national debt, they moved in coordination with one another, because the people that created the 401k, which was the Ways and Means Committee, which went to Congress, got passed, and it became a 401k in the IRS tax code, or the Internal Revenue Code. They knew that in the future they could already guarantee themselves, by looking at the numbers over here in the 401k, how much money they're going to get in taxes. So they created future taxes, which allowed them to go into debt.
yeah,
And again, to me, it's just amazing that as a business owner, remember the people that are making taxes, the majority of them own successful business, or come
right,
from parents who had successful businesses that was able to fund their campaign. So
yeah,
they're very open and alert to business activities and what makes businesses grow. And obviously, just like you said, taxes, or the ability to use the tax code to avoid paying taxes, that's what makes not only the business grow, but the economy grow. 73% of the economy is local businesses.
right,
70% of the success of the, right down the road from me is Flagler and, Breakers, everything out there on Palm Beach.
yep,
When you get out there, 73% of everything that it comes from there comes from local businesses.
yeah,
So the government wants local businesses to succeed. It
yeah,
generates more tax revenue than anything else. And so it was interesting. You mentioned 93% of people overpay in taxes. That was actually a Forbes magazine in 2018. And Congress at that time brought the IRS commissioner in and said, "Can you explain this to us? Why aren't you helping these business owners if 93% of them are overpaying? We've got all these tax laws that are made available to them." He said, "That's not our job.
their
We're,
job.
we're the enforcement agency, not the education." You need to focus on who needs to be educating those business owners.
Yeah,
And
yeah, but
I thought
unfortunately, there's a big
that
gap
was the
there.
best answer anybody could have given.
Yeah. It's funny. I don't know if you follow the Shift Sovereign, but they write these great emails, and I love the way they write them. But they said something recently, and I try to share this with a lot of people. I'm from Minnesota, you know that, and
Yep.
obviously we are the fraud capital of the world, right?
Apparently,
A
yes.
parrot? No, it's not a parrot, Matt. It's not a parrot. Trust me. And he wrote in the article, he said, everybody gets upset with overpaying taxes and how the government, basically doesn't spend the money efficiently as it should, et cetera. And he said, you know what? Here's the thing I want you to understand. You can't change any of that. But what you can change is overpaying in taxes.
Yeah.
And I thought about that and I went, you're right. Every time I see the news article, and they're almost 3 times a day here, it's like, it's crazy. And so, yeah, we could probably talk about that all day long. I want to transition because one of the things that my passion is, and what we're doing is really focusing on these conversations that are in silos, and being able to bring those conversations to places like Excel Empire and like some of the other relationships. Like we have a relationship with Garrett Gunderson, and that transpired through a conversation that he had with Excel. And so talk to somebody who's listening to this, and maybe just go around the horn and talk about the services that we can offer either in-house or because of the relationships, because it's not just hey, we only do this.
Mm-hmm.
And I think that's important for people to understand.
Absolutely. Absolutely. We at Excel are, because we work with business owners and high W-2 people, we have to be more than a one-trick pony.
Right.
We've got to be able to know a little bit, and I think that's one of the things that I love about the position that I'm in as the founder of Excel Empire. You know, I've had times where we're not going to make payroll. I've had times where I've had to have a side job to keep my first love, the business going. And so I relate a lot to business owners. I tell people, I own excavating companies, I own paving companies. I can actually operate the equipment, because there was a time in my life where if I wasn't doing it, I couldn't afford somebody to come and do something for me. And so I think one of the things that's instilled in our company is this idea that a business owner is just not about taxes.
Right.
Like the conversation I had with you before about Bob, we could have reduced his taxes to zero. But again, 287 was the magic number. That's what he needed to pay to be able to get that $4+ million loan to get his manufacturing facility off the ground. We're more about the success of the business owner. So that's the reason why it's not just about taxes. So I'm going to kind of go around the spoke,
Yeah.
and we can dive into whichever ones you want to do. But first and foremost, we do bookkeeping. It's called extra tax reduction through accounting. So we provide the basics. So you could be a startup business and say, you know what, I really want to get this right. I don't look good in orange. I want to make sure I categorize all these things. I take money when I'm allowed to take money, and I pay taxes when I'm supposed to pay taxes to whom. And so it's real simple. We just come in and we take over, we do the books, we run the payroll, we help answer your questions. And a lot of times a business owner will learn more by working with one of our accountants or bookkeepers than they would ever learn working with an accountant or a bookkeeper outside of it, because our people know that we want you to be successful. We want you to understand what a run rate is. Most people are like, you don't need to know what a run rate. I'm doing your books. I don't want to teach you. I don't want to educate you. In our case, we want to teach and educate, because we don't want you just to be a bookkeeping client. We want you to be a Crown client. And Crown Services is our bespoke platform. That's where we're helping people save the most money. You've got your own CFO. It's a fractional CFO that's bringing you tax strategy ideas, but they're also bringing you coaching, business ideas. They're very attuned to what takes place in a business. Like, it was on a conversation this morning. We did a valuation of a business in Miami, large, 30+ million company. And the business owner himself still is sitting on about 85% of all the contracts are generated through him. And he's getting older and he's wanting to think about exiting and things like that. And He says, my problem is every time somebody comes in and wants to buy me, they're not giving me the multiple that I want. And we ran the different scenarios of the valuations because we can do that very quickly. And we showed him if you hired a salesperson and you were not responsible for 85% of the sales, but you were responsible for 15, look at the difference that it makes in your company. And so again, that CFO that's putting all that together, those hypotheticals and those scenarios, the guy's eyes just opened. He's like, wow, based on that, I could afford to hire a high-end salesperson. Like you could afford to hire about 4 or 5 and still do fine with yourself. So Crown is that holistic approach where you have that individual that's learning about your business, learning about you, and helping you make that. Then we also have the Crown services where people are exiting. Like I said, we do about 40 to 60 million in people exiting. We call it a transition because a lot of times what really happens is the business owner knows, got a good idea what their company is worth.
Mhm.
They've talked, they've got a couple offers, they've got some competitors that sold. But what they don't realize is the CPA that you're working with, the average CPA has only sold $1 million business in their entire career. Do you want you to be their first $15 million sale?
No.
And so, that's a big part of what we do. Now, in that case, we do come alongside your current CPA, help them understand some changes that we need to make. A good success story there was we had a guy that was positioning his company for sale, thought it was going to sell for about $39 million. We came in, worked with the CPA, made some changes in the way things were structured. Right now, they're looking at about a $45 million sale and roughly about a 50% reduction in the exit taxes, the capital gains and the net investment income tax, et cetera. So that's really an area that has been growing as we're in that area where a lot of people are exiting their businesses.
Baby boomers, yo.
Yeah, and a lot of times it's so funny. It's like, yeah, I'm just going to give my HVAC company to my kid. Well, we come in and we help that because again, the moment you gift him 25% of the company, he now owes taxes on that. You owe taxes on that. He just got a gift given to him. You sold the company. That's a terrible way to make a transition.
And we have a client right now in the process that I brought to you guys. That's exactly, we had done
It's
some.
every day, every day.
Yeah.
And so we have strategies to help so that you as the parent can pass along the business to the kid. The kid's not automatically going to get taxes because he just got gifted maybe $1 million, $2 million this year in ownership, and you just sold $2 to $3 million in your business. So again, that's a big thing that what we do. So, and then, like you, we partner a lot with people that are giving, really good, advice. We call these preferred partners.
Mhm.
We don't do healthcare, or some of those ancillary things, but what we do is we have a good network of people that we could introduce somebody to that says, hey, you've got 25 employees. These guys can help you reduce your cost of healthcare by 35%. Again, what can you do with that? That savings, that's what I'm talking about. It's not taxes, but that savings can generate a better employee retention.
Right.
There's so many things you can do with that money. And then finally, we do things like credit card processing and things like that we partner with some of the largest credit card processors in the country. So instead of losing 3.5% on every swipe, where everybody is paying by credit card now, you're making 1.5% on every
Yeah.
time somebody does a swipe. So there's things like that through our preferred partnership. People that we vetted, we know that they're compliant. They're doing things right. They're not just a guy that hangs a shingle out and says, "Hey, I can save you 35% on your
Right.
um, auto insurance," but it really people that have been vetted and good, long-standing people that have our values as well. And when I say our values, we want to do things ethical. We want to be long-term partners with people, and so we really want to make sure that the people that we give that preferred partner status to are people that are going to treat our clients like we would want to be treated and like we want to treat our clients.
Absolutely. So Matt, wow, we've done a lot. We've covered a lot. I want you to think about if there's any final thought. We're going to come to that in a second, but we have this, I prepped you for this. We have this thing we call the 2-minute drill.
Yeah.
And so these are straight, short questions, straight answers, no overthinking. So are you ready?
Whew.
I know, lots of pressure because you haven't been prepared for this, so you have no.
I was gonna say there was no advanced document.
Nope, there was not.
Yes.
Nope, that's why they call it the 2-minute drill. So here we go.
Proud perspiration here then.
Yeah,
Okay,
there you go. Biggest tax myth small business owners believe.
Biggest tax myth small business owners uh believe. My accountant is taking care of everything.
Yeah, that's a great one. Reactive filing or proactive planning, how much does the gap actually cost?
Oh, and incredible. We've got people that are coming to us that haven't filed taxes for 5 years. So you talk about reactive filing. They just got a notice from the IRS. So theirs is in the hundreds of thousands of dollars. And there's things that we can do to help reduce that as we file.
Yeah,
But proactive, one of the reasons they didn't file in the beginning was because they felt that they could not afford to pay the taxes. They needed the money to grow their company. Proactive, we can come in and help you save the money so you can continue growing your company.
one mistake from your book that owners make most often.
Basically not doing any research onto what type of entity structure that they should do. I think that's towards the end of the book. But yeah, everybody goes and says, "Hey, I want to start my own company." So the first thing that they do is they get with an attorney, and the attorney sets them up as an LLC.
Yeah.
And the first thing their accountant does is fill out Form 2553 and elect to be an S corp. I can't tell you the number of people that are holding real estate in the wrong entity right now, and it's costing them hundreds of thousands of dollars.
CPA or tax strategist, what's the real difference?
Hopefully they would be one and the same.
Yeah.
The average CPA today is probably around, somewhere between 63 and 68 years old. And their world has changed quite a bit. But typically what you're going to find is they don't have time to be a tax strategist. It's not that they don't want to help their clients. I think CPAs get a bad rap.
Yeah.
But the problem is they've got 500 clients. Those clients are bringing things in after January 31st, and they've got a short period of time. Everybody wants their taxes filed on time. And so they work really hard. The average CPA works from January to April 30th, work about 100 hours a week. And then most of my friends that are CPAs in June and July, they're either fishing or golfing. Then they come back and they file all those extensions until about October 30th. And then, of course, it's November. They're working 100 hours. They take November off and December. So again, it's just a struggle for them to be both.
Right.
One of the reasons why I think Excel Empire is so effective is our tax planning team works and coordinates with our compliance team, but most tax planning takes place when these guys are busy getting your taxes done. So our tax planning team operates completely independently. So when you're getting that tax document back and it's a draft and it shows that your estimated payments for right now are $130,000, you're trying to talk to your CPA and say, "Hey, listen, I think this is wrong. And they don't have time to research for you because they've got 450 other people that they got to get their taxes.
Yeah, absolutely.
I think that's the big difference. We just structured ourselves differently so we can be proactive first and we can be compliant as well.
The thing I love about what you guys do with the team is that it's a second opinion without the charge, so to speak. You can decide if you want to move forward or not. But we're going to go through a process and uncover. And the other thing that I like is, it's a guaranteed savings. You guys stand behind what you do and the strategies and both the savings amount and then certainly supporting them. So Matt, I'm going to get you ready. I want you to think about one closing thought. I'm going to, and then where people can find you. So taxes aren't something you deal with once a year and forget about. They're a strategy. And like every strategy on this show, the owners who plan ahead are the ones who keep more of what they build. Matt, where can people find you and connect with you and give us one final thought?
Yeah. Well, easiest place to get a hold of us is go to the website, excelempire.com. And what we do is we have about 324 what we call certified tax and business advisors spread across the country. So we can actually put you in contact with somebody that would even be locally there that can help walk you through that process. And but excelempire.com is the best way to go and get a hold of us.
Awesome. Awesome. Well, Matt, thank you so much. I know our listeners are going to benefit from this conversation today, and we certainly appreciate your time and being here. So we do appreciate
I appreciate it. Everything but the 2-minute drill. It worked out well, but you really had me nervous.
No pressure, no diamonds is what they say.
There you go.
This has been go ahead.
I said, thank you very much. It's been enjoyable.
Listen, my pleasure. My pleasure. This has been the Owner's Profit Playbook. And as always, what you don't know is costing you commas and zeros. We appreciate you listening, subscribing, sharing. And until we see you again on the next drive, take care, everyone.
If you're serious about building a more profitable business, make sure you subscribe to the Owner's Profit Playbook so you never miss an episode. And if you know another business owner who could benefit from this conversation, share it with them. To learn more about how we help business owners uncover hidden opportunities and strengthen their financial strategy, visit mancusocg.com. And remember, what you don't know is costing you commas and zeros.